All right, in this video, we're going to go ahead and cover Chapter 3 homework and how we would want to try and perform these. So let's go ahead and begin our Chapter 3 problems. See how many problems we got here. Oh, only 9 questions. I should up that. No, I'm just kidding, guys. All right, again, I'm not going to do the multiple choice. Let's see where we're at. Okay, so it looks like we're going to just have this Part 3 situation here. All right, so we're focusing here on a lot of our adjusting entries. All right, let's just go ahead and see what our other parts. This is all linked together. So we're going to do adjusting journal entries. Okay. Then we're going to post those to our T accounts, and my guess is we're going to create financial statements. Is what I've set up. Yep. So we're going to create our financial statements from this. So this ought to be fun. Okay. Let's go ahead and do our journal entries first here, of course. So we have this Wells Technical Institute, a school owned by Tristina Wells. Yay. Provides training to individuals who pay tuition directly to the school. They offer training to groups of off-site locations as well. Initially records prepaid expenses and unearned revenues in balance sheet accounts. That's good because that's what you're supposed to do. Its unadjusted trial balance as of December 31st is indicated, along with situations that need to require adjusting A through H. All right. So let's go down here. Honestly, we don't necessarily, we need this information. We don't always need it though. But an analysis of WTI's insurance policy shows that $3,468 of coverage has expired. Don't need to go up to the trial balance for this one. It's very simple. We are knowing that we had our prepaid insurance account. So we're going to go ahead and debit our insurance expense by the amount indicated, and then we're going to credit our prepaid insurance for the same amount. All right. And let's just check our work right now just to see if we're on the right track. We always want to start off strong. Good. Starting off strong. Let's go back to the worksheet view, and let's see number 2. An inventory count shows that teaching supplies are available at the end of the year costing $3,006. All right. Well, let's go up here now. We got to go to teaching supplies. So bottom line is that we had, after all of our journal entering, 10,478, but we only have 3,006 left. So let's do this math. Let's go 10,478 minus 3,006. Okay, so we use $7,472 worth of teaching supplies. So we're going to go ahead and debit teaching supplies expense. We're going to credit teaching supplies. And what was that amount again? 7,472. Okay. Go to number 3. Annual depreciation on the equipment is $13,871. This is what you're going to see on any exam, quiz, homework assignment that we're doing now. I'm just going to give you what the depreciation expense is, and all you got to remember is that we're going to be doing a depreciation expense, and this is for the equipment for $13,871, and then we're going to look for accumulated depreciation on the equipment as well. And we're going to credit that for $13,871. My guess is then we're going to see another, professional library, another depreciation expense. This one's for the professional library for $6,936. Accumulated depreciation for the professional library, $6,936 credit. Okay, next one. On September 1st, WTI agreed to do 5 training courses for a client for $2,400 each. So that's each course. We're going to do 5 training courses. 2 courses will start immediately and finish before the end of the year. All right. 3 courses will not begin until next year. The client paid $12,000 cash in advance for all 5 training courses on September 1st. WTI credited unearned revenue. All right. So this is cool. So how much is this total going to cost us? Let's see, 5 times 2,400. So they paid in full. This is a nice client. We want to make these guys happy, right? Keep these guys coming around. Paid in full for the training, but we've only done 2 of them, and we've credited $12,000 to our unearned revenue account. Let's just go up and check that out. Let's see here. Unearned revenue, 12,000. There it is. Perfect. So we're going to come down here, and since we've earned some of that, we're going to debit our unearned revenue. And it was 2 courses have completed, so we're going to take 2,400 and multiply that by 2. $4,800 is what we've earned. And we're going to move it from unearned revenue to earned revenue. 4,800. Okay? Very good. All right. On October 15th, WTI agreed to teach a 4-month class beginning immediately for an executive with payment due date at the end of the class. As of December 11th, $11,048 of the tuition revenue has been earned. Wow, they gave you the number. They must have updated this one because it usually made you calculate it. So that makes things easy. We've earned this revenue. We haven't recorded it yet. They owe it to us. They haven't paid it to us. Accounts receivable, they owe us this money for $11,048, but we've earned revenue. Let's see, what is this for? Teach a 4. Okay, this looks like a training class. Teach a 4-month class. Tuition. It's tuition. Okay. You got to make sure when you have more revenues like that, you got to make sure you pick the right one or it'll be wrong. In fact, let's just check our work, make sure I did it right. Okay. Oh, unearned. Oh, look at what I did. That should have been earned revenue or just revenue. Well, you got to check. That's why you got to check. And this one was probably training. 5 training courses yet. Training revenue. You guys didn't say anything. You didn't say, Brian, you did the wrong count. Just kidding. All right. WTI's 2 employees are paid weekly. As of the end of the year, 2 days' salaries have accrued at the rate of $100 per day for each employee. So you're going to take 100 times 2 times 2. 2 employees, 2 days. So that should be $400. So we're going to do salaries because it said salaries. We're going to say salaries expense for 400 and then salaries payable for 400. And then the last one here, the balance in the prepaid rent account represents rent for December. Well, we're at December 31st. Balance in the prepaid rent, $2,097. Rent expense. Prepaid rent. Okay. Let's check all these out. It should be good now. All right. Looks good, right? Feel pretty good about this? I'm going to zoom out here because I know what's coming next. We're going to need, just barely, going to kind of be just a little too deep. I'm going to hit Alt Print Screen because I know what's next. And I'm going to open up, this time I'm going to open up Paint because my computer is running a little better today. Paint's just a better application for posting stuff because then I can crop it, and that's what I want to do. Oops. And again, you can do this however you want. So I'm cropping it there, and then I'm going to go back to this, and I'm going to come up here. And you know what? You can use the snip tool too. If you hit Windows Shift S, you're going to get the snip tool, and I'm going to snip this trial balance. Okay, so it puts it into my thing that I save it as. And I'm going to paste this. Oh dear, I need to undo that. I need to expand this. Give me all the room I need. Then I'm going to paste it, Control V. And so this is what I want to see. Now I'm going to, oh dear. Okay, and then I'm going to select this and crop. Again, this is just me showing you how to do this. You don't have to do this. But what I'm doing here is making it so where I can see all this as I go to the next part of this assignment. Okay. So now I got to populate these T accounts with what's in this information over here. And using Paint, what I can do is I can tick things off as I do it and know that I've completed it. So I'm going to get me this here. I'm going to change the color to red so that when I write on it, oops, I need to make it, come on, give me it. There we go. I can make it red. Okay. I can make my brushes bigger too. Whatever. It comes free with your computer. In fact, I'm going to use it because I want it to be thick so you can see it. All right. So what I'm doing here now is this. This is the unadjusted balance. Well, this is my unadjusted trial balance right here. So I need to translate the beginning balance of all of these accounts. So I'm going to do that right here. There's my cash balance. Accounts receivable balance was 0. Teaching supplies was 10,478. Prepaid insurance was 15,719. Prepaid rent was 2,097. Right? Yeah. Professional library was 31,436. Accumulated depreciation for the professional library this is the credit side, I guess. Doesn't really. These T accounts aren't very good. I'll be honest with you. 9,432. The equipment, we're gonna come up here for that. Has a balance of 97,000. And then we're gonna scoot this over just a bit because we need to come over here for the equipment at 16,768. Accounts payable was 22,000. Salaries payable was 0. T-Wells capital, unearned revenue was 12,000. T-Wells capital, that's a credit, 105,557. Withdrawals account, 41,916. Hopefully by now you know what should be debits and what should be credits. Okay, so now we're going to do revenues and expenses. Tuition revenue was 106,885. Training revenue was 39,820. Depreciation on those expenses were all 0. Those are debit balance. Salaries expense was to this point was 50,300. Insurance expense. Yeah, there it is. Insurance expense was 0. Rent expense was 23,067. Teaching supplies expense was 0. Advertising expense was 7,336. And lastly, utilities expense was 5,868. Okay, so I've pre-populated all the beginning balances. Now, all we're going to be worrying about, whoa, that really zooms in, doesn't it? Let's see if we can make that zoom a little bit less. Zoom in, zoom out. Boy, I guess that's kind of it. Well, anyway, now we're going to go through this. We're going to go through this each one at a time. Now, here's a little hint. Here's a little trick to the trade. When we're doing these adjusting journal entries, we never adjust cash. You never adjust cash. There is no such thing as a cash adjustment because you do not adjust cash. All of these transactions are cashless transactions. So having said that, we're not worrying about cash. So insurance expense. Let's find insurance expense and prepaid insurance. Here's prepaid insurance. So we're going to come over here and select A. And we're going to put, because this is prepaid insurance, 3468. Okay, populates us our balance. And then we're going to look for insurance expense down here. There it is. Letter A, debit 3468. Now you have to put the on the right side. You notice I put the A on the right side up here next to the credit and the A here next to the debit. You don't do that, it will count that wrong and you lose stupid points. You don't want to lose stupid points like that. Teaching supplies expense. Let's go up to teaching supplies. And this one's going to be, letter B. And teaching supplies was adjusted by that much. So we have $3,006. You remember how it said that's how much we had left? So we know we did it right. So let's find teaching supplies expense. There it is. We're going to put B, and teaching supplies expense was 7472. And we're going to do this for every single one of these. So I will stop talking because my voice sounds like it's going hoarse. All right, so those accumulated depreciations are done. Let's go to unearned revenue. That's our liability right there. We're going to adjust that down to unearned revenue, 4,800. Okay, and then we're going to do training revenue. Oh, sorry, I keep doing that wrong. Make sure I did the unearned revenue correctly. Yep, okay. All right, accounts receivable is going to be debited. And then tuition revenue. Same amount. Oops, almost did a debit. I get it, guys. This is kind of a tedious part of the assignment. Normally we can, do this by hand and it's a lot faster. But at the same time, we got to know that we are doing this correctly, okay? And we got to make sure that we do it precisely. So, let's see. Salaries payable is G. Don't mix it up with accounts payable. Accounts payable are only for our vendors. Salaries expense. And then rent expense. Seven. All right. Now that we're done with this, what we can do is we can. No, I don't want to do that. Come on. We're going to make this big. All right. We're going to need to cut this as well. And let's use the snippet tool again. I'm hitting Windows Shift S for the snip tool. Okay. And then I just drag this on the areas I want. Okay. It's going to copy that to the clipboard on the computer. And then I don't need any of this anymore. So I can paste over it and I don't care. That was almost too perfect. And then I'm going to control or Windows Shift S again. I'm going to snip these. Go back to my paint. Paste it, but I'm going to move it down here. I'm going to repaste it because I cut some of it off. And then the last part I'm going to snip. And again, this is so that it'll make my next section go faster. If you guys have a better way to do this, you're welcome to do it. If you don't care about the if you don't care about how it's kind of you'd have to balance back and forth, then that's fine. Okay, that's just fine. You can do it however makes sense to you. This time though, we are going to zoom in and we're going to look at it this way. So we're going to start off with the income statement, all right? So let's come down here when we do income statements. First thing we're going to do is we're going to select revenues. Let's start off with what revenues we have. Oh, let me get this done like that. Okay, so we have tuition and training revenue. So let's do that. Tuition revenue. And our balance is 117,933. And then we have training revenue for 44,620. This is where I would get your marker here. And hopefully it stayed the same. It didn't. So let's get the bigger brush. And let's just do this. Let's just say we're done with this one. We're done with this one. We've added them to our income statement. Now, well, let's do our expenses. That's what's next, okay? Let's do, and it doesn't matter what order you do these in. So let's do depreciation expense for the equipment and the law library. Oh, whoops, dang it. Okay, professional library, we have 6,936. And then for the equipment, we have 13,871. All right, come over here. We're going to mark those off. Scroll down, we have salaries expense, 5,700. Mark this one off. Come over here and look for more expenses. Okay, withdrawals is not an expense. We have rent expense. For 25,164. Training supplies expense, or teaching supplies expense. And then we have advertising expense. Let's go ahead and put those dollar amounts in. Okay. So I have utilities and insurance expense left. Okay. Those are done. I don't see, whoops. I don't see any more expenses or revenues. That's unearned revenue, not a revenue. So I think we're done here. So let's say, what is this? Net income, right? Because it's not a loss. So let's calculate this. We got 162,553 minus 128,15. Our net income is 41,738. Go to our statement of owner's equity. Getting balance here was 0. Oh, wait a minute. Let's look and see what our balance was. Let's put in net income here. Add net income of 41,738. Okay, T-Well's capital balance was 105,557. And then we're going to take out withdrawals. So we've done this one. We're doing this one. 41,916. Okay. And that's where we're at with that. All right. I just want to check my work real quick just to see how we're doing here. It's not complete, but we're looking good, right? Everything looks pretty good. All right. So let's go to our balance sheet now. And basically what we have left here is everything else. We're going to take this over for our ending balance on our capital account, 105,379. Let's just do that right now. Capital, what was it again? 105,379. 105,379. And then the rest of this is just basically coming through all this and annotating what it is first. First thing we're going to put here is assets. Let's go ahead and look and see what we got. Okay, first we have cash. Always list cash first. Cash's account is 27,245. Then we have our accounts receivable for 11,048. Then we have teaching supplies for 3,006. Let's mark those off. Cash, accounts receivable, teaching supplies. And then we have prepaid insurance, 12,251. Prepaid rent. Let me look and just see really quick. I don't know. Sometimes, you don't have to. Paid insurance. All right, let's put it in here just in case. Prepaid rent. Sometimes they want you to put it in here. Sometimes they don't. If it's a zero balance, you don't typically display it, but sometimes they do. Professional library. Okay, we're going to put the balance of our professional library on here. And it is 31,436. Then we're going to show accumulated depreciation for our professional library, 31. Oops, no. Accumulated depreciation professional library is 16,368. Then, so let's go ahead and mark those off. We did prepaid rent. Go over here, we have equipment. For 97,000, and then we're going to do accumulated depreciation for the equipment of 3630 something or rather 9. 3639. There's that, and then we're going to have here total assets. Then we're going to have here liabilities and equity. Let's see if there's, it just wants liabilities for right now. I guess right here we want equity. Liabilities, what is our liabilities? Accounts payable, salaries payable, unearned revenue. Okay, liabilities here we have accounts payable for 22,000. Then we have salaries payable for 400. And then we have unearned revenue for 7,200. And then we're going to have here total liabilities and equity. Here we're going to have total liabilities. And here we're going to have total equity. Nope, it doesn't want us to do that. Okay, that's fine. All right, that should do it, right? Look, 134,979, 134,979. We match. Let's check our work. We are Dunsville. Answer is complete and correct. Pretty tedious, but doable, all right? So I know you guys can do this. But if you have any questions, again, let me know. Good luck on your homework. Good luck on everything, and we'll see you in Chapter 4.